Good day and welcome to another episode of Market Watch. Today we'll be discussing especially about the global markets, and we'll be talking about how that will be affecting the local market, specifically talking about the stock market and how the Fed rate increase would affect us. Today I have with me Shadi.
Hi Ranu.
Hi Shadi. So Shadi, if I just put the question right to you, how do you think, there's a lot of talk about the Federal Reserve in the US trying to increase rates. I think they're quite happy with how the numbers have come around, and so I think they've been long awaited to be increasing. And also I think with all the growth plans and internalizing by President Trump, these things are more forecasted to happen. So what is your view on this, Shadi?
Yeah, Ranu, we now currently the Fed rate stands at 0.75. Recently they increased their rate in December 2016 25 basis points from 0.50, and now it stands at 0.75, and Fed likely to raise their rates in March, because if you see a further adjustment to the federal fund rates, mainly because their unemployment targets and inflationary targets are in line, because the unemployment rate was 4.8% in January, is now in line with the Fed's FOMC's expectations, and with the job market strengthening and the inflation rising toward their targets, I think Fed is comfortably ready to increase the rates again, because also according to the CME Group's latest probabilities, they have increased their probability to 88% for a rate hike next FOMC meeting. So also this is the first time in year 2017 they are doing their rate hike after December, and also Fed officials continue to indicate there will be 3 rate hikes in 2017 and another 3 more rate hikes in 2018. So these are the expectations and the probability where next Fed rate event.
Yeah, sure. I can imagine, because if you look at President Trump again, he's very aggressively wanting to build industries within the US. So I think there'll be a lot of funding requirements for these. So I think with the expected demand coming in as well, I think the rates will be going up as well. But also I think on the plus side for them is the Federal Reserve is in terms of the economic numbers are hitting what the Federal Reserve is looking at. So Shadi, if you overall looking at this, how do you think, before we had a lot of quantitative easing happening in the US and in Europe, a lot of money, there was a lot of money in the global economy, and there a lot of money was flowing onto the emerging markets, which Sri Lanka is of course a part of. So Shadi, in your opinion, what do you think will happen in terms of emerging markets? Because I think the money will be tight going forward. I think there will be a lot of hot money inflow to the US. But what do you think the impact overall would be onto the?
Yes, there are a lot of impacts. When it comes to the rate hike, I want to emphasize on some major impacts, ways a Fed hike could impact the emerging markets, especially when it comes to the global currency, which is the dollar. Valuation of the US dollar will have a huge impact, because with the rate hike we'll expect the dollar to further strengthen, because and also we can see the dollar index rising year to date, and since the dollar is the global currency, change in its valuation have a tremendous impact on everything, from global foreign reserves and also the corporate balance sheets containing dollar denominated debt. So and also Ranu, as you said, hot money, many emerging markets have seen significant foreign direct investment since the 2008 global financial crisis. As you know, the US and the European bond yields at record lows. So investors flocked into higher yielding emerging market stocks. So with this, that was also after the QE, we saw so much of money flowing to emerging markets. But with the recent development of rate hike, we have seen the trend reversing now, and we can see so much of interest toward the US markets. And also I want to mention that the Dow Jones has performed 5.5% year to date. So that is one impact we can see, hot money flowing to US. With the rate expectation, and we can see the markets are already priced with the expectation, which also confirms there'll be a rate hike next week. Also the US dollar, I have to mention, has been rising relatively to many other major currencies, including many emerging market currencies. So this can have a big impact on the corporate balance sheets, especially containing dollar denominated debt, where repaying dollar denominated debt becomes increasingly difficult. Because I also wanted to mention, according to the according to the Bank for International Settlements, there was about 1.1 trillion in dollar denominated bonds issued by non-bank emerging market companies outstanding in third quarter 2015, compared to just 509 billion at the end of 2008, a significant increase during the period of low interest rates. So we can see how the corporate balance sheets are leveraged due to the low interest rates yields. And now within these increasing rates, repaying dollar denominated debt becomes very challenging.
I think a lot of restructuring might be in the forefront for these companies as well. I think rates going up, I think even with the double impact again with your currency depreciating against the dollar as well as the rates going against you is a bit of a double impact on the balance sheet again on that end.
That's right. And also, Ranu, another impact would be the sovereign debt and emerging market bonds may also be impacted by the rising US dollar, since treasury yields are likely to increase as a result. Also the US 10-year bond yield stands at 2.61%, increase from 1.6 last year. 1 year change is 35%. So this clearly shows the increasing yields. Also, from a broad perspective, this is good for the exports, but definitely, mostly it hurts the investments for the emerging markets. So also I would like to say, since we are in the emerging market basket, would like to add a point from the technical view, where SPI is currently at 6,088, 6,095 levels. It's hovering within that region. If it breaks below its key, this region, we expect the market to fall in the next support region is 5,960 to 5,870 levels, which is a very oversold region, and we can expect the PEs to be attractive at that.
Definitely, Shad. I've also been seeing that the market has been falling consecutively for the last 3 days. I think pre-market sessions, I think it has been at its lowest since February. The market stopped at about 6,088. I think the lowest since February 6th for the year. So market has been coming down, and also, however, the PEs are very attractive. That I have to mention. I'll be touching that going forward again as well.
Currently it stands as 11.8.
At about 11, exactly. And if you look at Sri Lankan stock in terms of the equity market, is not performing as well as its peers, regional peers. But if you look at the foreign investments have been net buyers into the market. Thursday they bought about 63.6 million rupees, and year to date foreign inflows stand at 1.95 billion in equities. So what I'm noticing is at least in the foreign investors who are building portfolios, I think they're noticing this clearly low attractive PEs, because overall the company results have been quite attractive. In whatever came out, they've been quite good. So I think with those results as well, they have attracted to the certain companies, and taking positions in certain equity positions. I think because like I said, when we said that's where the multiple attraction I think is there.
Yes, despite with these global sentiments,
Definitely.
And the foreigners are seeing it very attractive.
Very attractive. So I think on a note to the local investors as well, I think it's quite timely. It's quite timely to look at maybe building portfolios. I mean, again, one must keep in mind the fact that you're looking at a more longer term horizon in terms of reaping returns. So, but it's a good time maybe to keep looking at the market. This thing, and I mean, if you further look at it in terms of the foreign investments, just to in terms of January, 40% of the turnover value has been from the foreign participation, and in February 45% has been contributed. So what we notice is the overall foreign participation is there within the market as well, and the turnovers have been significant contributor by the foreigners. So Shadi, to end that on that note, but like in terms of a technical, I know you were touching, but where do you see the technicals
Yes.
exactly? Maybe I know you can never wait for a proper bottom out, but in terms of the technicals, where do you think the market could be bottoming out at the moment, so that we can see a entry point maybe?
Yeah, considering overall this global sentiment, we can see, as you said, despite this sentiment, still the foreign investors see this a very attractive point, because we can see some foreign contribution is increasing.
Yeah.
And also from a technical perspective, as I mentioned earlier, 960 to 800 levels, if market dip into that level, with the expectations, the multiples we can expect to be very attractive. And also, as you said, the South Asian region markets have performed, except for the CSE year to date. So I feel now currently we are closing towards its oversold region. So I feel this would be a good technical entry point, considering value in investing in value stocks.
Definitely, Shadi.
Yes.
So on that note, I think we will end for today, and I'd like to thank everybody for tuning in for another episode of Market Watch. Have a very good day, and bye-bye.